Hey, Steve. Hard to believe it's been already 3 months since our last index call, but we're here today to talk about some of the highlights from the third quarter 2020 index call. So I think from my perspective, the good news is it does feel like the IT services market is starting to recover after a couple of really tough quarters. So we had global combined market ACV of 14.6 billion, and that was up 4.3% quarter over quarter and 3% year over year, which I actually think is pretty good news given what the pandemic has done to the global economy over the past couple of quarters.
Yeah, I absolutely agree, Stanton. Obviously, a big chunk of that is the growth that we've seen on the as a service. And if there's anything that the pandemic has taught us, is really the growth of the hyperscalers in the cloud. So, I mean, everything from, Tencent, Alibaba, Baidu in the East to, Google, IBM, AWS, Microsoft in the West, it's really come together to really help, explode that market. I think that's just going to continue. We're seeing so many clients really start adopting, large cloud, public cloud transformation, quite frankly, that I think the more we see it, you're going to see SaaS providers start picking up in that space, cloud management providers start picking up in that space. And clearly there's just still a lot of growth to go there. So it's been good.
So Steve, another piece of good news is that managed services actually performed better than expected. So we had 6.6 billion of ACV in the third quarter, and that was actually up 10% versus the previous quarter. Now, on a year-to-date basis, of course, we're down 6.3%, but that was also 120 basis points better than our Q2 forecast. So again, it does feel like things are starting to improve a bit.
Yeah, I think you're right, Stanton. I think we're seeing good improvement on the overall managed services. Again, from an ACV perspective, we added 600 million of additional ACV this quarter. We had some really large deals that came back as well. So we had 5 mega deals this quarter versus 1 the previous quarter. But I would say more importantly, the volume was really up this quarter. So we saw an increase in volume, even though I guess to be a little bit cautious, 85% of the overall transactional volume was less than 20 million. So there was a lot of small deals. It does show that the market's starting to move forward. I think we're still going to see some delays. I think we're still in some slow decision making for the clients because quite frankly, some of the large managed services deals are just difficult to do remote. It's hard to have the face-to-face conversations. It's difficult to do due diligence. It's difficult to really understand, the whole magnitude of what a client may be doing. That said, though, clients are moving forward and being successful in doing that, and we think that will continue. The Q4 pipeline looks strong as well for managed services, so I think it bodes well.
Steve, you talked a lot about the deal activity. We actually had a record amount of restructuring activity this quarter. It was actually up 67% over Q2. So what do you think is driving a lot of this restructuring activity?
So if you think about new scope coming to market, that was significantly down. So if I'm a client and I know I need to cut costs and I've got 3 service providers in today, and let's say I'm outsourcing today my data center and I want to add network in there, I want to add apps, or maybe I want to add some new apps associated with it, it's easier to increase the scope and restructure that existing deal than it is to try to go back out to market in these times. I would say the service providers have also been incredibly resilient during this period. They've been able to come in and offer cost concessions, extended payment terms, really being creative on what they can do from a restructuring as well, which I know we talked a little bit about last quarter.
So Steve, infrastructure as a service continues to really be the rock star of our industry. It's up 20% year to date. We've both talked about how much acceleration we see in cloud adoption, specifically public cloud adoption from our clients. In fact, before this call, we were talking about a client that wants to move 95% of their portfolio to the public cloud. What I'm interested in, given that you run Europe now, and then you used to run the cloud practice in the Americas, are you seeing differences, maybe different adoption patterns for public cloud in the US versus in Europe?
6 months ago, Stanton, I would have answered the question, yes. We do see different adoption patterns. I think the European market tends to be a bit more conservative, a bit more cautious, needs to be proven. Data privacy is incredibly important here. Data sovereignty is critically important here. Obviously, you've got privacy in general and GDPR and things all add up to say the answer would be yes. I think that's changed. When I look at clients now and I talk to clients across the globe, I think there's a wide perception now that really the public cloud, and maybe a bit of hybrid, but the hybrid with a public cloud provider servicing the hybrid will be the approach.
Okay, Steve, so let's close out by looking forward. So what's our forecast for managed services and for as a service for Q4?
When we look forward, we see some really big deals coming to market. So I think the mega deals will continue. I think on the managed services side, I could honestly see us crossing the 7 billion ACV per quarter again, which would put us just down about 5% year to date. So we're forecasting 6%. What's interesting is the as a service market, we're pretty bullish on it as well, Stanton. I think the overall market for as a service on the back half is going to be up 15.5%. I think the hyperscalers are going to continue to do really well. The more work from home we have, the more, large scale clients are going to have to put in things like Teams and Zoom and video conferencing capabilities and expand that. Also, consumer applications are moving more and more to the clouds. If I had one caution on the as a service market, it's probably the fact that as the software as a service was flat quarter over quarter, and we're not seeing the same growth levels. And where we do see the growth levels is really on the large providers. So I think ServiceNow is performing exceptionally well. Workday is doing well. SAP, S/4HANA is doing well. Even Oracle is starting to do much better on the SaaS side. But you've got a lot of SaaS providers there that are going to hold the market back a little bit, that aren't growing at that same level the way they were. I think we're going to see a good half of good back end of the year. And again, given what we see in the pipeline all around, and given what we know our clients are talking about on cloud deployments and digital transformation, I see budgets coming back, not at the same level. We're still going to be down, year to date. It's not going to be perfect. It's not a V recovery by any stretch, but there's a lot of good signs that we're in for a healthy quarter as we go forward.
Awesome. Thanks, Steve.
For more details, please visit the ISG Index page on our website, www.isg-1.com.